Welcome to another episode of Stock Talk. My name is Amin Reina and I am an investment coach and founder of Sage Investors. And as an investment coach, what I do is I work with new and experienced investors who are trying to achieve some level of financial security in their lives, but they're just frustrated by the whole investing concept. Either they don't know where to start with respect to investing, or they've been investing for a long time but just aren't getting a lot of traction with their portfolio. So what I do as an investment coach is I teach people. I engage with them on how to make more educated and obviously more successful investment decisions so that they can achieve some level of financial freedom in their life and achieve it with confidence. So that's kind of what I do. So this is Stock Talk. This is my little webcast, my little podcast and video. We're back on video for this episode. The previous episode we just did audio only. So this is Stock Talk. I'd like to talk about all things investing, share some of my observations about what's going on in the market, some of my takes on what's going on in the market, and also sharing with you how I make my own investment decisions. So this is episode 79, and yeah, it's investment decision day. This is the episode I like to do every month, where I like to share with you how I've made my own personal investment decisions with not so much with the intention of giving recommendations or stock tips, but more just about sharing with you kind of my thought process and how I went through making these decisions, really with the goal that you can kind of take some of these nuggets of insight and some of my observations and kind of bring it into sort of your own investment framework, your own decision-making framework. So today I'm going to share with you a few decisions that I made in the past month. Normally I also write a blog post to go along with it so I can explain things a little bit more in depth, but I haven't got around to it. Hopefully by the time the next episode of Stock Talk comes out, the blog post will be there and you can check it out. You can check it out on my website, sageinvestors.ca. Just go to the blog, click on blog. So before obviously I begin, one of the key things I want to make sure that's out there is I'm sharing with you my investment decisions, and what these decisions that I made are by no means recommendations for anybody to go out and buy and sell and basically copy what I'm doing. One of the things I do as an investment coach is, as I said, I teach people, I engage people how to make better investment decisions, but I don't tell people what to do. I don't say go buy Facebook, go buy Microsoft, or whatever stocks. I don't tell people. The whole point of as an investment coach, what I love about it is I get to teach people so that they can make the decisions on their own. So please don't, it's that disclaimer aspect of it. The stuff I'm talking about here are definitely not recommendations that you would consider for your own portfolio. I'm just sharing you my circumstances and my own decisions that I'm making. So yeah, it's I believe it very much so. I love doing this because it's one of the things I really believe in is being transparent. It's one thing for me to teach people how to make investment decisions. It's one thing for me to teach people how to read income statements and balance sheets and figure out what the value of a stock is. It's another thing to model the behavior. It's another thing to practice what you teach. So I very much believe in practicing what I teach. And so the monthly investment decisions that I share are a reflection of that. So enough of the, administrative side of it, background side of it. Let's get down to business. So what did I do? I did a couple of things. I actually added a couple of new stocks to my portfolio, and I also bought some more shares of another stock. I didn't do any selling this month, in the past month. So what did I do? So the first investment decision I made was I decided to add to my existing position in Imperial Oil, ticker symbol IMO. The stock basically basically fell through the $40 level and was trading at the time at about $37. So I decided to take a position, buy some more shares to drop my average cost down. When I initially bought this, I've held the stock now for a few years now, and the first time I bought it was at $50. And slowly, as oil prices have been going down and as the stock has been going down, I've just been kind of like nibbling and building, adding a little bit to take the cost down. So now my cost base on the stock is $42. So I've come from $50 to $42. So what did I do? Why did I do this? Well, the big thing is oil prices, and I think the reason why the stock price kind of came down a little bit was that oil prices again were starting to track back downward. At the time when I was looking at, oil was now falling into the $40 range. It was trading mostly in the 50s, but now it's been tracking downward into the $40 range. And then the stock also, conversely went down to under $40 too. Big reason why oil prices have been going down is a lot to do with supply, and which is interesting despite the fact that there's been this big publicized cut in production by all the Gulf states, the OPEC countries. Prices keep slipping down. And even if prices were to slip down and stay in a trading range, from the analysis that I've seen, and from my analysis of just analyzing oil companies, my experience analyzing oil companies are among the most amazing, well-run, managed companies out there, in the sense that they've demonstrated this ability to create wealth. They can create positive economic profit, high returns on invested capital in a really bad market, and also in a really great market, obviously. And so obviously we're in a down cycle for oil prices. And despite that, companies like Imperial Oil, especially the bigger name kind of companies, really continue to do a good job of just creating wealth. They're really on top of their costs. They manage their costs extremely well. They're very flexible, very nimble in terms of shutting down, ramping up, lowering production and stuff and things like that. And so even the fact of the matter is, despite the prices being low, Imperial Oil continues to be generating positive economic profit. So when I look at that, and I just look at the long-term issues, okay, if oil is in a down cycle, even if it stays in a trading range, let's say if it stays in a trading range in the $40 to $50 range for whatever, a couple of years, this company is still profitable, and so it's comfortably profitable. So I decided to use the opportunity with the stock going to below $40 to just buy a few more shares and kind of lower my cost. So my cost now is down almost $42. As I said, the stock's trading, I think today it's trading around $37. So I'm down still on the stock, but my cost base is a lot lower. And again, this is a stock I'm comfortable with holding for a long period of time. And the fact of the matter is, we're in a down cycle, and if things happen, usually things will go down and then things go back up. So I'm comfortable holding the stock where it is right now, and just letting it go and letting it just hang around there. So that was my first decision. Now, the second decision actually my second and third decisions, I did them at the same time. And for those of you who follow my blog or have been listening to previous episodes of Stock Talk, previous episodes where I share with you my investment decisions, these two companies that I've added, stocks that I added, should be no stranger to you. Basically what I did is I opened a position and bought shares in two companies. One was Cal-Maine Foods, ticker symbol CALM, and Tyson Foods, ticker symbol TSN. So these are stocks actually I owned at the start of the year, and I sold them and I decided to sell them to take profits. These are also two stocks that I have on my own personal investment list, my buy list, my go-to list that I always have with me, that are companies that I really like, that I've liked. I like how they're run, I like how they're managed, I like their performance, how they demonstrate consistent performance. These are, in my opinion, best of breed companies, like dominant companies in their sector. But I would never buy them because I would think the stock price was too high. I think the stock was overvalued. And so I always keep these companies on this list. In the event that if the stock pulls back and the fundamentals of the business stay where they are, then I'm going to dive right in. And it's not about, scratching my head of should I dive in. I dive in because it's having this list is also really great in terms of executing your investment strategy. Having a list of stocks that you really like, that you want to buy, and if the opportunity comes, if there's no maybe I should think about investing. No, you've done your homework already up front, and it's just a matter of executing your strategy. So Cal-Maine and Tyson Foods have been on my list. And this is the third time I've actually owned these stocks. I've owned them a couple of times before. I've had a couple of iterations with them, and they've all been really good iterations. I've made some pretty decent, 20% type returns with owning these stocks in the past. And so I think Tyson Foods, last time I only sold it for 6% gain, but I'll talk about a little bit about that in a second. So why did I get back into these companies? So let's pick it off. Let's start off with with Cal-Maine Foods. Cal-Maine Foods is the egg producer. Their bread and butter is eggs. They do all things egg products. They right now in the U.S. account for 23% of egg production in the U.S. So they are the dominant, one of the, if not the dominant, egg producing company in the U.S. If they're not, they're pretty damn close, or they're right up there. So I bought in the stock at the same level that I actually bought it the last time, which was about $37.50. And the last time I sold it, it went up to like $45, $46. I sold it and I banked my profit and it came back. The stock since then has come back down to that 37, 38 level. And so I thought, this looks like this might be a really good opportunity to jump in. And I did a little bit of homework on it, and the stock has been down since I sold it. The stock was down like 25% since the start of the year. The egg production, egg prices are in a down cycle right now. The price of eggs is actually 60 cents lower now than what it was a year ago. It's clearly in a down cycle, and so there's been a lot of pressure on the stock. The stock has just been trending down. And usually, actually, historically, when you look at this stock, there's some interesting observations with it, in the sense that at the start of a year, the stock usually trends down. If you go back the last 10 years, you'll see that the stock kind of trends down at the start of the year, and it's correlated with egg prices. Egg prices usually trend down at the start of the year, but then they kind of ramp up throughout the rest of the year after the first few months. And so last year was kind of a weird year because that pattern did not occur. So a lot of people thought that pattern of where egg prices trend was just an anomaly, and we're probably going to go back to a more traditional type way in terms of the cycle for egg prices. And so I'm thinking, okay, if the market's down right now, if the product is down, production is down, what's the classic tenet of investing? Buy low, sell high. I know the fundamentals of the business. I know the company's balance sheet and financials are really solid, very little debt, strong cash position. Financially, this company's not going anywhere. They're not going bankrupt. They have a dominant best of breed position in the egg sector. This is actually, a lot of people are saying, because the market is depressed, the industry is a little bit depressed now, this is maybe a great time for Cal-Maine to actually go out and buy some other smaller egg producers and increase their scale, increase their size. So I wouldn't be surprised to see them kind of buy out some smaller kind of localized egg producers. So I factored all this stuff in, downside of the business cycle, stocks down 25%, solid balance sheet, management, knows they have a good competency level on the management side. They seem like they know what's going on, and to me, it's a best of breed company. So I just said, you know what, I'm gonna open up a position here, and if the price keeps going down even more, I'll probably buy more stock to lower my cost position. So. As I said, this is my third time owning this stock, and the previous two times I've kind of followed the same kind of pattern with it, and it seems to work. And that's kind of the theme I really want to talk about. Also, the learning that comes out of this is a lot of times people looking for stocks to buy, trying to get looking for stocks that are going to go up 100%, double their money, triple their money kind of type thing, want to hit these home runs. The reality is you can generate those type of returns, but you can do it incrementally. And that's really the beauty of having that investment plan and having a plan in terms of how you want to exit stocks, in terms of identifying the types of returns you want to achieve. If you can identify those and establish those up front, when you get into situations when you buy really well-run, high-quality, well-run businesses, it's low-hanging fruit. Because if you buy them when they're depressed, eventually they're going to go back up. And if you get 15, 20%, and you can cycle through those returns on an iterative basis, granted, we're not talking day trading, buying it today, selling it tomorrow, buying it again the next day. This is about coming back, a year later or a year and a half later and buying it again if the stock is depressed, trying to generate the return again. And over time, you're going to get that same home run effect by systematically buying these stocks at low prices and selling them at high prices. That's the tenet of investing, right? It's the core tenet of investing. So these situations that I'm talking about with Cal-Maine Foods and also with Tyson Foods are a classic kind of methodology and ideology that I follow in my investing plan is buying really well managed, great companies, dominant in their sector, and buying them at cheap prices, and then holding them until they retain some element of value or achieve a return that I'm looking for, and then banking the profit. And then if the company falls back in price, then I go, hey, is the fundamentals of the business the same? Has anything changed with the company? Is the management style changed? Is their strategy changed? If it hasn't, and the stock is down, and maybe the company is in a low end of the cycle, then it may, like, what's stopping you to buy it again? Like, you don't have, you can buy it over and over and over again over long periods of time, with the premise that, you know, I'm not going to buy it, so I'm going to sell it 3 days from now. I'm buying it. Every stock I buy it with the intention I'm going to hold it for multiple years until I get the return that I think it's worth, or the return that I'm seeking. So that's the mentality, and that's the framework. And I work with people, when I coach people how to make investment decisions, I tell them, instead of trying to hit home runs, trying to get bite-sized returns over long periods of time is going to get you the same results at a lower level of risk, because you're not holding on and opening yourself up to all kinds of uncertainties and risk. If you're systematically buying and selling and banking profits, investing in quality assets, quality businesses, your chances of doing well are, I think, a lot better than just buying stuff and holding it for like 10 years. You know, you can do it. It's a totally legitimate strategy. There's all different ways. I'm not saying my approach and my ideology is the only one. There's all other ways. I'm just sharing you what I have. Take it for what it's worth. So that's Cal-Maine Foods. So my third and final decision was, I decided to buy back into Tyson Foods, ticker symbol TSN. And I sold it in January. I made only 6% on it, 6.5% on it. And the reason why I sold it in January was because there was a big report out there saying that the US was going to suffer a severe case of bird flu was out there, and it could have real damaging implications in terms of livestock and in terms of food production. And so my decision at the time was like, you know what, I don't think I want to stick around and see how this pans out, because it could get ugly. I'd rather just bank my profit, what little I had at the time. I thought at the time it was a negative game changer moment that could impact the long-term durability of the stock. I'd rather have sold the stock and just see how the dust clears, how things shake out. And if it shakes out, if it's not as bad as what they were saying it was gonna be, then, you know, I would be happy to go back in. So that was in January when I did this. And the stock has been down. It's down it was almost down 10%. And again, it's almost back at the same level that I bought it at originally in my last iteration. And so despite all these issues that are going on, there was a big issue that the company had a massive fire at one of its real core main plants, and a lot of people say that's going to impact their future production. So that stock took a hit. So the stock's been kind of taking a hit in the last while. And again, but when I look at the fundamentals of the business, again, it's the dominant meat producer in the country, in North America. Its top 3 customers are Walmart, Costco, and I think one of the other big American chains. They're everywhere. They control basically the entire meat processing food chain, from, you know, production to distribution to marketing and everything. So they're just a solid rail company. Again, the financials on the company are rock solid, great financial position. The balance sheet's really in really great shape. And so it's in a down cycle. Again, it's in a down cycle. And so I looked at the opportunity. Stock is down. The industry is in a bit of a down cycle. But I look at the fact that this company is still generating economic profit, creating tangible wealth in a down market, which is what I love to look for. If companies can create tangible wealth in a depressed market, in a weak market, eventually the cycle is going to switch. And those type of companies, when things go on the upswing, when the industry goes on the upswing, the stocks are going to follow and they're going to surge through it. So these are the type of companies I love to look for. Are companies that are dominant in their industry, but the industry is in a down cycle, but they're still making profit. So I looked at it and I said, okay, you know what? This sounds like I'm not going to say a no-brainer, but it's fitting in terms of the criteria and my strategy and my investment ideology that I like to follow. High-quality business, dominant brand leader in its industry, and creates tangible wealth, tangible profit, solid balance sheet, Stock's probably undervalued. It's coming under pressure. So there is upside to the stock. So again, I'm happy to open up a small position and add more to it. If the stock continues to fall down a little bit more, I'll be happy to buy some more of it and average down my costs. If it goes up, it goes up. So so from that perspective, that's kind of what drove me to buy back into Tyson Foods. So those were the three decisions I made. I bought, again, to recap, I added some more, bought some more shares in Imperial Oil, and I opened up some new positions in Cal-Maine Foods and Tyson Foods. Two companies that were on my little list of companies I really would like to buy, but never really get to buy because I think the stock's prices are too high. I think the prices on these two companies are in pretty good shape. And interesting also that these are food companies. And it also fits into kind of one of my little criterias that I have, that I like to buy. I think dominant, durable businesses and companies out there are companies that kind of cater to four different demands that we have as people that we need to survive. And one of them is food. So to me, food kind of oriented businesses and companies are companies that are always going to be in demand. They might be wavering a little bit, but there's always that consistent demand for food. There's going to be, when I look at Cal-Maine Foods, it's eggs. Eggs is a core staple in our diet, at least in our North American diet. Now the fact is we're eating eggs all the time. So one of the things I was wondering was that with the real proliferation of all-day breakfasts, like by McDonald's and Burger King and all the fast food chains now, I wonder if egg production is going to have a little bump up, even though market prices are depressed right now. But that kind of event, I'm wondering if it's conducive to higher egg prices and more egg production, which is going to benefit companies like Cal-Maine and Cal-Maine Foods. So food, for me, food is a core pillar in terms of my investing ideology. Yeah, it's a constant area where there is constant demand. And it's an area where, demand doesn't really fall off a cliff. It might ebb and flow, but it doesn't fall off, and it's a consistent demand we have for food. We need food to survive. And so there's a lot of things we can give up in our life, but I don't think we can give up eating. So, and especially eating core staples that are part of our everyday diet. So food is that, and meat is that, feeds into that. You can talk about the whole vegetarian kind of concept there, but the reality is meat is still a core element of our diet. So I don't see that going away anytime soon. It might diminish a little bit, but there's a huge population, I think, that's still going to eat meat. So that's all I got for you. That's all I have to share for you. I'd love to hear your thoughts on my decisions here. If you have any questions about my decisions in terms of, again, how I went through it and how I came across to getting to these decisions, feel free to give me a shout. You can shout through my website, send me an email through my website, sageinvestors.ca, and just hit the contact button, drop me an email, and I'll be happy to answer this or anything else about my practice in terms of my coaching services and also my online courses that I teach. And my in-person courses that I teach on investing. I teach courses on how to buy and sell stocks, my everyday investing program, as well as I teach people how to buy and sell ETFs. ETFs are becoming a very common, dominant player now in the investing landscape. So I teach a course on how to figure out how to buy and sell these little ETF products. So that's that. And I'm just trying to think if there's any other announcements that I have. Oh yeah. For those of you who are interested in keeping track of my podcasts and wanting to know about future podcasts, future blog posts, future videos that I do, future mind map videos that I do, you can, what I do is every Wednesday I send out an email newsletter. I call it In the Loop, and it basically highlights all the new content that I'm kind of putting on my website, as well as I'm sharing with you various investment information, investment research, articles that I come across that I use in framing my own investment decisions. So I'm happy to share them with you. If you're interested in getting on that subscription list, it's free. All you got to do is just go to the website, sageinvestors.ca, go to the section on subscribe, and you just got to enter your email and name, and I'll get you on the list. And every Wednesday morning when you wake up, you will have a nice brand new spanking new edition of In the Loop. That's pretty much all I got for you this week. And if you you have any questions, give me a shout. Happy to answer them to you. That's pretty much it what we got for you this week. This has been another episode of Stock Talk. My name again is Amin Reina, and I'm an investment coach at Sage Investors. And thank you for listening. If you're listening through the iTunes, if you're getting these episodes through iTunes, feel free to subscribe to all the other ones. Feel free to leave some feedback, leave some stars. It's all good. So thank you for listening. Thank you for watching, and we'll catch you again another time. Take care.